Hi, this is David Dominguez at the Money Show Traders Expo in Las Vegas. I'm here with Toni Hansen. How are you doing, Toni?
I'm good. How are you?
Doing great, thank you. Toni Hansen of ToniHansen.com. Toni, as traders, we're constantly on a journey to become consistently profitable, right? I mean, that's kind of the goal, is to be able to wake up, read the markets, read the price of the markets and what they're doing, enter a trade, exit a trade, and go through the process of trading so that at the end of the day, you're either profitable, or if you've lost money, it's within boundaries that you set.
Right.
And how does one become consistently profitable? Is that even possible? What are your thoughts?
Well, you know for me that is yes. I'm going to say of course,
of course,
it is.
Right.
Of course it is. I've been trading for 23 years now, and a lot of different markets. And I know you have seen me trade live a
Absolutely.
lot, so the proof's in the pudding there, right?
It really is. And let me just add, in terms of trading, I'm a part of your League of Traders. You have a Telegram channel in which you post your trades, and you will post the entries, the exits, and you're posting them live. One of the things that you've developed in terms of market entry is timing.
Yes.
And your timing, I must say, is impeccable. And that's very difficult for traders to do. You could get a general consensus and idea, and if you know which direction the market's going, you're already ahead of the game. But to be able to pinpoint that pivot can be challenging.
Timing, because you can like have 3 stops in a row, and then it goes exactly what you're expecting.
Right.
And it's such a hit on your confidence level, not only your account, but your confidence level, to just get taken out tick by tick by tick. And you know, my system of market analysis, it wasn't something that bam hit me overnight. It was that I was taught, you buy so-and-so 7-day pullback into a 20-period moving average, and you just do this and you follow these rules strictly. It's a channel break entry, your stop is under that low. And things would look exactly the same, but one of them would work out really well, and then another one would just be a disaster, or my timing's totally off, and it would base longer or it would base shorter. So it really got down to looking at like the components. And psychologically, I took a huge beating those first couple of years. I didn't have a mentor or anybody like that. I was just kind of like learning, like, building from here's some dirt and some rocks, and now go build a house from it.
Right.
You know, that's how I started. And psychologically, I'm like, what am I doing? You know, one day I'm up and I'm like, yes!
You're the king of the world.
Yeah, queen, but
Queen
yes.
of the world, yes, of course.
But then the next day I'm like, I really
Yeah, I have no idea what I'm doing. Right.
I am just like, why am I doing this? Why am I putting myself through this? This makes no sense. I should go back and go to law school or whatever. Stay in archaeology. And it was a process. So what I started doing was journaling everything. You know, writing down, printing out every trade I took, marking my entries, marking my exits, and then looking at how I should have traded it, you know, and what pattern is there? Did I even trade a pattern? And if it's a certain pattern, what do the patterns have in common? Like, if they're all bull flags, which bull flags look the closest? The ones that fail, is there something that changes it? And I'm very visually oriented. I was trained as an artist. I pick out patterns really easily. GPS messes me up because I can drive someplace once and be able to drive that same route.
I'm a guy, so I understand that, you know.
So I don't like to listen to the GPS. I want to have that visual of it. And so you've seen me where I will say, ooh, I saw this just earlier. Let me go grab that example and show you. This is what's happening now. You can use this as a roadmap for what's coming next. And that's what helped build the confidence. And then not just like making mistakes and saying, oh, crap, and moving on, but going back and looking at what that mistake was. and reminding myself of that mistake and what caused that mistake over and over. It doesn't mean that I won't repeat the mistake,
right?
But I'll repeat it less and to a lesser degree because I catch myself. But if you just let a bad trade go and just not dwell on it and just move past it, you don't learn from it.
So a bad trade's a good learning experience.
They are. I mean, you're going to learn more from your bad trades than your good trades a lot of times. I mean, somebody can make money on a trade and write it off as a good trade when it's really a bad trade.
I was just going to ask you if you could define what a bad trade is, because I know in the past you've mentioned that. If you don't mind, elaborate.
No, right? I think a bad trade is when you're not following your system. Like, if you have like a system where consistently your results have shown you your target level should be like up here.
Right.
But you panic and you get out here for whatever reason, or you kind of like start second guess yourself, that can be called a bad trade because
you didn't follow your rules.
You didn't follow it. And then when it gets up to there, you're kicking yourself because you knew it was going to go there.
Right.
But you're not in it anymore.
Right.
So the journal is going to help you understand, hey, when can you hold for that level? Or is there something in this trade that really is telling you you need to get out here?
Right.
If you're not journaling, you're not learning. And I guarantee you, people at this expo, you might come across a couple people that are journaling, or some that are saying they're journaling. They're not doing it in a way that's actually going to teach them anything.
Right, right.
So I'm looking at, I felt good today. I took this trade. I got in here. I got out. I'm looking at, hey, this was not an emotional entry.
Right.
This was not an emotional exit. This was where the strategy told me the exit should be. Here's where I exited. Was there a technical reason to exit early? Or should I have added into this trade? In the past, does this trade usually go more? Something I should build into? So that's how I determine, hey, this is a scalper's market. I'm going to scalp. I'm not going to hold for longer. Or this is a major reversal. Same pattern, but instead of using the technical target, I'm going to go for a lot more on that one.
So you're reading the technical market. You're reading the not only the price development, but where the market is in reference to the development of price.
Right.
And so at that point, maybe I need to look for a bigger swing to the upside or to the downside, as opposed to something where you're scalping. And all this you realize once you go back and you do your homework and you develop a system in which you go in and you journal. Can journaling be difficult? Can it be easy? Is it something you just...
It can be as simple as printing out your charts, marking your entries, marking your exits, labeling what your strategy is, and then putting all of your strategies that fall into that in a notebook. So like every bull flag, you put, here's your bull flag. And then going back and looking for patterns in those. So you can
within
put like,
the bull flags.
Here's the bull flags that work, here's the bull flags that didn't work, and then you can go back and organize those. So yeah, it takes time outside of the markets, but it's not something you gotta like go and organize and analyze every day. It's something like take an hour and go back and review. And that's when the patterns will stick out and stand out. You might not see them if you just go and look at today's trades and then tomorrow's trades and the trades after. But when you go and look at every single bull flag together, every single failed bull flag together, every single winner, that's when you're going to see those patterns.
Absolutely. And it goes back to the original question, Toni, and that is developing a consistency in your trading. And it comes back to the consistency in how you approach your day, how you approach your market, how you do your analyzing, and really the journaling. And I know that when you've taught us in our class to do basic journaling and marking your entries, your exits, and maybe making a note on the side as to say momentum started to shift here, therefore I managed my trade technically here. Then that gives you an idea so that when you go back 6 months later and you see the same pattern, because the market works in cycles, and those psychological patterns develop on a daily basis.
And that's the only way you're going to build confidence. You can't build confidence any other way. You can say, oh, hey, I'm up so many $1,000s today, yay, I'm really confident, but it's a false sense of confidence. It's not, can I repeat that tomorrow? You have to feel that system. Like when I take a stop on a trade, it doesn't surprise me because I go into that trade knowing what my risk is, that hey, this is a higher risk trade. I might have a better chance of stopping out. So if I stop out, it doesn't blow my confidence anymore. Whereas it used to. If I take a stop, I'm like, I am an awful trader. I'm never going to make it. I'm
done.
But if you know why something happens, you're less likely to beat yourself up for it.
Of course, and I think that's very important. I think understanding where you enter a trade, and if you get stopped out, why you got stopped out, and therefore when it happens the next time around, you learn from it, and you could have a strategy in place for that.
Yeah, so that was an excellent question.
Excellent. Well, thank you so much. Again, my name is David Dominguez. We're here at the Traders Expo at the Money Show in Las Vegas, and Toni Hansen, ToniHansen.com. Again, Toni, thank you so much for the work that you do.
Glad to be here.
You're absolutely amazing, and the fact that you're able to share your knowledge with a vast amount of individuals is certainly an awesome thing. So thank you so much.
Thank you.
Appreciate it.